Good weekend all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up, your weekly edition. And this is for Sunday evening, the 22nd of December. As you can imagine, my schedule, like yours, going to get thrown off now as family coming into town, or you're going the family out of town. Volume's going to drop off. The markets will become one of these, what am I watching it for? That's how this is going to end up. Christmas and Hanukkah both fall on Wednesday, and then of course right after that we get over to next week. It's going to be another, if you will, bumped week, because a lot of people won't be back from their New Year's. If you figure out when it falls, day after for travel, it's the week after that we get really back into the groove of things. Will the market wait that long? You never know. What you are seeing, and I think you realize it, is everywhere you look there's 2025 predictions. Do yourself a favor. Treat it as entertainment and no more than that. Trying to make a decision how 2025 is going to be for at the end of 2024 and be correct on it. Bloomberg did a study as to how often what firms are right and wrong that have done this for a number of years. You're throwing a dart at a board, all right? There's too much. There's too many different things. The world has changed. You know, before the internet, you'd make that. Things didn't change that much. You were waiting for news to come about from Reuters with their pigeons. I'm being funny, but you know what I mean. Well, the world has changed now. We all know everything in a snap. And that doesn't mean we know how to dive into it, but it's all there. So treat it as such. I always look at the markets and say, I think it's beyond 90 days is almost impossible to predict with accuracy. I really believe that. And, you know, trying to pick the next day is always hard, but, you know, a week at a time is a little bit easier. You can smooth things out. That is the reason. I'm mentioning this because right after Christmas, I'm going to have my holiday sale. It will not be for my research. That's over. Now it's the courses that we have, and you can buy one for yourself. You can give one away. Wait till you see how we're going to put these together for you. And that is a neat gift, because instead of it going into a drawer that you never visit again, how many of us have ugly sweaters and things like that? I give mine away to Goodwill after an appropriate period of time, so I don't get caught doing that. We all move on, but learning, that's the fascinating part, especially if it sticks with you and you learn something from it. And that's what we'll be offering. It'll include access to my research. That's what the courses come with. Our charting software. Cool thing, and you need not start it until you decide to start it, or the person you give it to does. All right. What we're going to get now, tomorrow, not a lot. You're going to get the November National Activity Index and the Conference Board. This one's a little more important. How does the consumer feel about things? And that one's going to come out at 9 o'clock. So we'll get a feel for there. I think you'd agree with me, Santa might have left the North Pole as the markets rocketed back on Friday. You know, the world came to an end on Wednesday and Thursday as the markets were falling out of bed. Now, can the markets go up into the end of the year is going to be whether or not the Santa Claus rally comes. It's the traditional rally begins Friday. I'm sorry, Wednesday. And it ends on the 2nd of January. Doesn't mean it can't go higher, but if it's going to work, those are the times. It has worked near over 50 years, just about 80% of the time, if you go back and you look at it. That does not mean it'll work again. So you could be in that 20% where it doesn't work. There's no way to really know, but obviously there's more tendency to go up than down. The non-traditional kicked in on the 17th. It might have been at 48 hours early. I mean, the market did take off on the 19th, so we will see what happens. This week I'm moving to SoFi, and you know, I asked you to give me ideas. One of you did, and I appreciate it. This is a big outside week to the downside. I mean, it's encompassing not just the week before. This is encompassing the whole month. That's important. Is this a trade top is what some traders will ask. The pattern is now one of a higher high and a lower low. You've got support way under you, so there's room if it wants to come down. The market had gotten over and stayed over the Bollinger Band and then rode it all the way up. So there's room to pull back. Now, where it won't pull back from and where it captures the shorts is if this week's high, this past week, is taken out. Then wherever that upper Bollinger Band comes in, that's where I'll target the market again. It has the embedded reading, which tells me on this break, traders will probably look for spots to get long from. So that's something to consider. When you come to XRT, not a surprise. You've had your holiday bump in retail. So this is buy the rumor that the sales will be good and strong and sell the fact, hit the market. You lost the ability to embed, you're backing off. It's not bearish because you're still over the 18-week average. The bias is up, but you certainly have a trade top of sorts in place. Netflix. This is the big time of the year where Netflix gains subscribers. Are you aware of that? If you go back and you look at their history as to what they do, now with football and all the other products that they have coming on, I will be looking at this now very hard for potential buys. I look at this market as still the growth. I want to own Netflix as an investor because it's the best of the streaming services, period. Nothing competes with them. I have Paramount, Peacock. I can go on and on. My list is long. My wife loves to watch it. And by the way, so do I. When I get a break, you want to lose yourself in that. I only sleep 4 or 5 hours a night, so it's fun for me. But in quality and what it has, there's nothing like Netflix. It's that simple. I wouldn't want to own Paramount if it weren't for 1823 and the other show that they had, which is gone now, unfortunately. I won't mention it, Kevin Costner's show. Higher high, lower low. Yellowstone, as you know. Lower highs, lower low, right into an MCHI, the 18-week average, which puts the market into bearish footing. Why? Number one, you're not oversold. You have readings in the 35. Number two, lower highs, lower lows. It's a bearish formation. Number three, the market's under the 18-week average. The first major support is the 100-week average coming in right here at 44.53. When you look at Home Depot, it has really sold off. The market was just up into the 440 area, and you're suddenly down $60 like that. Interest rates staying high and going higher don't help this market. All right, so come spring, they'll be fine, and the markets will anticipate spring. Today, what do we have? We just had winter solstice. So the shortest day of the year, what does that mean? More sunlight's coming all the time. And I think that's very important. And as that comes, this is a stock that, every year I want to own it going into spring and summer, and we'll see what happens. In Meta, a backing off, all kinds of issues, legal issues, threats, blah, blah. Lower, low, higher, high. I don't see a trend trade right here. Now let me make something clear. That doesn't mean it just didn't make higher highs. But as a trader, the overall pattern has been one to be long over the 18-week average, but catching that move has been a son of a gun other than from this area right here. After that, it became much more difficult. When you look at KRE, the big question is what happens with regional banking? Interest rates are staying high. That doesn't help them as much as it does the big boy banks. What I'm scared of in this, and I brought it up many times, are the owning by some of these of malls, suburban malls. Are they doing well? The owning of these by other commercial real estate, that's typically their role. And how much of this is being done on C buildings, which will be in trouble this year. Those are the buildings you got to worry about. Those that can be converted to apartments, they might find a savior. Without that, I don't see them coming back because what's happening is to get employees back in offices, and that trend will go on. You have to have a nice office. You have to have amenities. You're getting them to leave their house again. You want them there 5 days a week. There better be things around. I can tell you, if you're on LaSalle Street in Chicago and you're trying to get somebody to come to an office, forget it. There are no restaurants. It used to boom with them. There are no clothing stores. They're closed down. There's nothing there. And if you're going out at night, you're scared. If you're going out of the Board of Trade, the old market that used to rock and roll. I mean, people didn't leave the building till late at night. I know I spent a good part of my life there and at the Merc. I know this. Not the same. And that's not just Chicago, it's other cities. So you got to pay attention to that. Can they come back? Yeah. Especially if they make those areas more residential, get people into them. You got to bring food stores in. It'll bring all the other parts that go with it. The land isn't going away. You got to repurpose it. Higher high, lower low. You can see where it's at. And by the way, a lot of these areas going under, they have excellent geographics around them. It's repurposing that you got to figure out. In XLE, higher high, lower low, coming down in the energy. You know, a lot of people are talking under 60 in energy. I see it. I mean, high interest rates, relatively speaking, slowing economies. Where's the demand coming from it? And the U.S. isn't going to decrease production. We may not drill as much. We may not do those things, but our technology out of the same well, or a well that we were using before that we can use again in many ways, that's where we can pick up more oil over and over. That's what's going on. And keep your eye on LNG. It's going to be an important market this year, liquid natural gas. The dollar, why not higher? It's got everything going for it. No other country has what we have. Forget that I'm speaking to you from America. That's not what I'm saying. What I am saying is the economy's humming. The unemployment is minor. The innovation here is insane. It's a great place to be, and it's unusual. Even our federal chair says it's an outlier. I mean, we should not be as strong as we are according to everything you'd have thought, and it just keeps beating everything. Will there be the piper to pay? Maybe. Don't know, but right now that's super bullish. Gold is holding its own. It's not breaking. It's not railing. It did sell off from its all-time high, but it's not falling apart just yet. What would make it fall apart? I'm not sure. I mean, you're going to have less war, I think, under Trump. It appears that Hamas is already talking of releasing now 11 more hostages and younger people. We don't know how many will be dead that they're holding versus live. They want to get about 250 of their hostages released, some with 20-year sentences. But how they'll be released won't be to them. It might be they'll be deported to other countries. Doesn't mean they can't get back somehow, but that's at least the game plan. And it certainly sounds like we are on the brink of an event between Israel and Hamas. In copper, market keeps failing as it should until China does something. Now you're into all the support you and I have talked about on these weeks, the 100-week, the Bollinger Band, and right here. I have said to you over and over, this is the canary in the mine. If you're a metal trader, you watch this because unless it turns up, there's problems, and that's how it has basically been. So as I look at it all, and that's where that ended, I want to remind you that if you'd like to get my research, I write 2 reports a day. Now, I call it futures. You do understand if you're trading stock indices, it's exactly what you're trading. You're just doing it via an ETF. If you're trading bonds, notes, TLT, BND, it's basically what you're doing as well. Metal markets, what do you think GLD or SIL are based on? It's right there. COPX is 100% on the futures contracts. So look at how this all plays out. I write about it. I give you trade ideas. I write in paragraph and then bullet points. I make it so that you can read my report ideally in under 2 minutes. I don't want more of that time. But I do 2 a day. The morning's got where most of the meat is, and the evening preps you for the next day. You go to iraepstein.com research. It's all explained there. You can go to free offers if you haven't had it before and take a look at it from that end. In the meantime, I'm Ira Epstein, wishing you all a great evening. I'll be with you right up until Christmas. Take my day or so, and then we'll come back. I'm Ira. Take care.